just want to welcome everyone. We've got Ken Calhoun from trademastery.com, and Ken, the stage is yours whenever you're ready, my friend.
All right, well, hey, welcome everybody to today's exciting action-packed session. We've had a hot market. We're going to go through a lot of charts. Hey, all of the traders out there, I'm here at your disposal, and it makes it a lot more interesting for me and for you if you guys ask questions. So do feel free to ask occasional questions. And Jordan, if you would interrupt me frequently with questions, that would be great. We do not want to hold them till the end. We want to answer them in progress during the half hour. So every few minutes, I'll ask, hey, Jordan, any questions out there, okay? You know, we're going to look at how to day and swing trade pivots and reversals. As always, all information is for educational use only. There's my smiling face in front of my monitors. You may have seen me everywhere. Unlike a lot of educators, I'm an actual trader with P&L proof that I actually trade. So anyway, let's go ahead and get underway with today's session. The main thing I want you to get out of today's event is how to recognize and trade smart pivots and reversals. Now, Jordan, can you hear me? I just want to make sure we're together online.
I can, Ken. I can hear you great. As the
Okay.
questions come through, I'll go ahead and ask them, okay?
Okay, great. And the first question I want to ask everybody is, so that I adapt my presentation on the fly, how many of you are day traders? How many of you are swing traders? Or how many of you do both? If you would, right this second, type in the letter day, swing, or both. And then after 30 seconds, I'll ask Jordan to tell me what the dominant response is, so that way I can tailor the examples to the needs of the audience. So it's not a canned PowerPoint presentation, it's real charts live right now. So if you would, please type in day, swing, or both right now, so I know what kind of trader we're talking to, and we'll take it from there. Jordan, any answers coming in? Is there a dominant theme, or is it a lot of both?
Look, it looks like we've got both day, swing. It looks like it's a nice balance of all three.
Okay, great. Good to hear it. So we will cover examples of all three. So let's take a look. One thing I want you to pay attention to, the first thing I want to pull up is the VIX. And the CBOE Volatility Index. It pivoted, it gapped down this morning, then it ran up, then it sold down, or dropped back down again. It doesn't sell, and then ran back up again. Now, I like to trade UVXY, and I'm currently in this guy, and I bought this on the pivot. The first pattern that I want you to learn for pivots for intraday is an ascending kind of connect the dots bottom. So when you see a double bottom of which the second, this is a very valuable, you have my word on this, I do thousands of trades a year. When the second bottom is higher than the lower bottom, that's usually a good pivot long. So if you're looking for a pivot, look for double bottom where you see a pivot there. And of course, you can also look at the classic candlesticks like hammers and bullish engulfings and that kind of thing as well. Now, one of the things you want to look at as an active trader is when you're in the money in something. Let's say, for example, Virgin Galactic. I called it long for my live room members this morning at 38.7 and traded it myself there. The most important piece of that equation of buying 38.7, that was a long call, was that I subsequently then told everyone that we want to go to cash at 41.20. Now, although not the exact top, it was pretty dang close. How did I know that was the top? The answer is simple. It's very critical. This is another not common knowledge, but extremely valuable technique that I will share with you, is you use a 2-day 1-minute candlestick chart, and your previous day's close, the PDC, is extremely valuable because that sets the tone for whether or not buyers are going to continue in or it's going to fade back down. And so whenever you're in a long position from underwater here, you know, this is under the previous day's low. That's what I call underwater trades. And we nailed the pivot. I called it long at 38.7. The more important piece of your trades for any kind of trade is the exit. It's more important than the entry. 38.7 was a great entry, but had I neglected to mention an exit, we'd be down instead of having been up almost 2 points. So one thing to look for when you're figuring out the exit is sell into previous resistance areas. Like here we can see a double top, and so selling there was fine. And I said, new traders sell it all here right under the 41. The official exit call was 41.20 because I saw it started to fade back off the top there. And the way that I determined that was based on the previous day's chart there. So it's very important that you understand the previous day's open, high, low, close, the OHLC, and then make your trades in the current day in context of that kind of volatility. Now let's take a look at some upside movers and how to know when to sell tops. Okay, you'll never get the exact bottom or top, but you can get pretty close. XELA was a good play between 4 and 5. This illustrates a concept that I've taught for years, and you may have seen my articles in Stocks and Commodities and Equities and other places, where I like to trade within whole numbers. The long trigger for this would have been right over 4. And arbitrarily, this is a very valuable tip. We're going to migrate into swing trading in just a minute, but I want to start off with some hot day trading charts for you folks today. I like to trade within the whole numbers. So I might buy the like 420, sell the 480. So that's a very valuable tip, or something that I find remarkably consistent is the power and profit potential of whole numbers. So for example, AHPI, look at this guy, right? This guy ran from 4, 2, 4, 6, 8. Who do we appreciate? 10, not 12. But anyway, one thing I want you to look at is multiples of 10 are always major resistance. So when it comes to trading pivots, the better part of discretion is valor, and the better part of a winning trade setup is knowing when to sell that guy before it does a mean reversion pullback or stalls or just slows down, and you want to release that capital to put to work in another trade. So anyway, when I'm trading, I look at things like the multiples of 10, like $10, $20, $30 is key support and resistance. And for these cheaper charts, every dollar counts, right? So this got halted multiple times on the way up, hence the little blank spots. But you can see it got halted here at the 550 and the 650 and the 750 area. The whole number of support and resistance would have made a really good roadmap within which to trade that. Now let's take a look at some swing trading charts coming up momentarily. But let's start off by looking at the SPY for our intraday chart for pivots, and then we will look at swings. Anyway, one thing that you always want to pay attention to daily is the spiders, the S&P, or if you have an E-mini feed, the ES chart obviously is going to give you that same intel. But you always want to keep an eye on the SPY chart, and you always want to keep an eye on the VIX. And they move oppositely, right? The VIX looks like that. Hey, look, a nice little spike in the VIX. That means my UVXY is up, yay. Okay, but the spiders often provide really good pivot opportunities as well. A good example this morning, we had the CPI out at 8:30 and the market got hammered, right? It dropped all the way from 437 support, 1, 2, 3 pattern. Here's a bonus pattern for pivots and reversals. Every time you see a FOMC, a CPI, a PPI, there's always, for 20 years I've taught this, there's a 3-step reaction. Any Wall Street trader will tell you this, any prop trader, anybody at any major market maker will tell you this, and I'm telling it to you as well. I used to have so many professional clients come into my Vegas seminars. You get a 3-step reversal pivot on any FOMC or CPI or PPI. You get the knee-jerk reaction, that's wave 1. Wave 2 is the counter trend reversal, and then wave 3 is the final move of the following the first hour or so after the report. So the CPI came out at 8:30. The street didn't like that. So we got the knee-jerk reaction all the way down here, and then we got the mean reversion pivot here, and then the wave 3 was there. And that's a pattern that you see, and often it'll be the opposite. It'll run up and then pull back and then keep going up. And anyway, those kind of pivot patterns are one way to avoid getting shaken out if you're doing pre-market or in-market trading on FOMC or pre-market on the CPI like this morning. Anyway, there's a pivot here, and it ran all the way back up to resistance. The second, not law of thermodynamics, but the second law of professional active trading is always expect to fake out right above the obvious high and never for the rest of your life buy the obvious breakout. That is dumb money. And I can say that because I was dumb money back in the 90s. It's a, hey, you were waiting so long. Hey, finally took out the new high. Let's buy it. Doop. And then it ends up, how did that happen? It was going up. It was looking so nice at the time. Always expect that somebody, it's not paranoia if they're really out to get you. And they are really out to get you. Well, I should say, traders know that this is an exit target for anybody who had correctly bought our pivot, right? So if you buy a pivot and it runs back up to resistance, this is the sell zone. This is not the buy zone. What you want to do is put what I call a safety buffer or some, for example, in stocks, I usually use anywhere from 20 to 60 cents above the obvious 2-day high before getting in. So you want to dodge a bullet. So that's a pivot or reversal you do not want to get in, is to buy an obvious breakout because often it'll reverse right back down again. And the way to tell if it's going to do that, and we're going to open up for questions here in just a second, is take a look at the 15 and the 10-minute candlestick charts and see if there's in fact any kind of a reversal pattern up there. I don't see any here, so we didn't see any voice of candles on this, but frequently you will find reversal patterns if you use the 5s, the 10, or the 15-minute candlestick charts. So for example, here's a shooting star, right? This marked out the near-term top right near 2810. So this one didn't have a reversal candle, at least not the, other than the tweezer top, I guess, but that's not really a strong signal. But this had a shooting star right up here. So that told us that the buyers are running out of steam, at least for now. And sure enough, they did all afternoon. And we got some buyers into the close. Frequently, when you look at a longer term, if you want to confirm a pivot play on a day trading chart, I mean, just have at it and take a look at some of these. Did any of these bounce? And if so, what would be a candlestick pattern that would have told you there's a pivot in the coming? Now, one thing that I mentioned in my breakout charts is I like to see small followed by large whole red body candles. My colleague, Steve Nissen, the only person you should learn candlesticks from, told me this is called the 3 soldiers pattern. You got a march forward of increasing whole red body candles. So if you see 2 or 3 candles of increasing whole red body height, that means a good breakout. Now for reversal, like, hey, stop the madness. When is it going to stop? If you see a topping tail, like a shooting star type pattern, a topping tail, that often tells you, it's kind of a bear cup. It tells you if you were to plot out the data points, it would make a bearish cup pattern. And that tells you sellers are coming back in. And sure enough, they did. So oftentimes you'll find pivot patterns of noteworthy trade setups as well. So Jordan, any questions so far?
Hey, Ken, no questions right now. Everyone's just listening along.
Okay, well, if anyone has any questions, we've got just around 15 minutes left, so do feel free to ask. Now let's switch gears to some outstanding swing trading charts, which that's not one for swing trade. By the way, that's a good swing trading chart. When you're looking for what's worth day trading versus swing trading, you do not, under any circumstances, want to swing trade something with extreme volatility like this, because if you've done so for any length of time, you know that it bites you in the rear, because often it'll gap down the next day. Like, you know, it was up at 5. How come it's down at 3 today? Well, more sellers than buyers. That's as far as we think about it. So some charts are unsuitable. They're not suitable for swing trading. And those are these high volatility day traders charts, okay? Gotta watch out for us day traders, right? We know how to trade around swing traders, right? Now, if you're looking for strong charts and looking for pivots, one of the things that comes to mind, for example, here's an outstanding swing trading chart called NSA. Not to be confused with the space administration. That's a rock star swing trading chart, with the exception of the one gap down. But other than that, a really good 45-degree angle continuous breakout from the mid to high 30s to the low 50s. So if you're in a winning trade, one of the things that becomes vitally important is knowing when to start scaling out. Now, remember, you never go all in or all out. You scale in at least 2 positions. No more than 5 or 6. It gets to be cumbersome. And frankly, it's not worth the administrative hassle if you do as many trades as I do to be doing scaling in 5 or 6 times and out. But 2 or 3 times is fine. So reversal pattern. Is there anything here that tells us we would be cautious? No, it looks like a rock star chart to me. But one way to identify a potential place to scale out or lock in a profit if you're long is look at the previous swing high right here at 52. A loss of 52 is where it starts scaling out, and it'd be all cash if it gets down to just under the 50. So let's say you started buying this thing back in the 30s or the 40s, and now it's in the money and you're trying to figure out, you know, I'm supposed to let my winners run. How do I do that? Well, the answer to forecasting out directional plays is, first of all, if there's any obvious candle patterns like shooting stars or bearish engulfings, or if there's a consolidation that lasts too long, it's going sideways, or if it's pulling back like some of our commodity instruments. Or things like the home builders ETF, right? Here's the XHB, ran all the way up to 80. Then we had a bearish kind of shooting star there and it dropped here. Obviously, that would be the place to sell. You do not hold on to it and hope for it to come back, but it was going up so nicely at the time. You sell the first sign of trouble because often it'll get cut down. So when you're in a winning trade, speaking from experience, it is profoundly disappointing to be in the money a lot and then be at the money less lot because you sold. Here's another pattern. This is not an intuitive pattern. This is the opposite of my favorite momentum, small real body followed by large real body green candle on the uptick, right? On the way up, we're looking for charts, patterns like this, or a small candle, then a larger candle, small candle, larger candle, small candle, larger candle. That's a long pattern. On the flip side, if you see small red candle followed by large, big red candle, that's a sell, right? You'd sell right under the loss of support there. So if you've been building a trade, let's say you started early and you're buying, say, from 34, 36, 38, you bought 42, let's say you went to cash here, but then I have to say, okay, it's irresistible, I'll get back in. And then you get stopped out of break even, but you try again. Okay, so now you're back in. So you had a win, a scratch, and now you're trying, this is the life of a trader, at least speaking for reality, how I trade. So you get in here and you may scale in a few points later, and then you're letting it ride, but then you're wondering where to go from here. Well, one of the key strategies is to look for not only multiples of 10, for example, you always sell nines, like 79 would have been a good place to sell, or wait for the 74 here because of this candle. But if you see two red candles of increasing sequential height, that's bad, right? That tells you sellers are accelerating. And so even if you can't watch it all day long, you come home at the end of the day, you know to put a stop, say it's 72 or something on that, on this chart, if that's where you saw it. So another good chart to look at. Let's see what else we have. There's so many rock star charts. I want to focus us on a few good recent ones that have good volatility. Traders ask me about these charts all the time, and they're asking me about these particular charts on my Saturday week ahead broadcast. And you can see they picked really good charts. They're going up, but from a pivot or reversal standpoint, you want to identify where to go out of a trade once you're in the money. So entries are good, but exits are more important. Yeah, sure thing. Yeah.
What are the time frames for the red and blue moving averages?
50 and 100. I use the red is 50. I think, yeah, and I'm sorry, the text is tiny up there. I use the 50, the 100, and the 200. Notice, please, the 50 SMA almost always gives you false signals, or frequently gives you false signals. For proof of concept of anything, you always look at the stock market itself, the broad market. The spiders, the SPY, found support at the 50 SMA 100% of the time. Every single time it lost the 50 SMA, it bounced. So what did that tell me a few weeks ago? Don't think the market's going to sell off at that 417 right here, because when it was dropping down here, because I knew from history, every single time it lost the 50, it recovered. That's the more important question to ask than the periodicity. The 100 is a strong signal strength. The 50 is kind of noise. A lot of traders use even tighter, even dumber moving averages, like a 22 simple moving average is the magic, or 22 XMA. You know, no, you have to use a moving average periodicity. I used to be a statistician for the Ford Motor Company. I'm somewhat of an expert in numbers, and one of the things to look at is variability and range. And one of the things to look at is where a signal generated that's actionable, that produces a win, versus false breakouts and false breakdowns. So this is an example of pivots or reversals, in this case, right off the 50 SMA each time. So that would be a buy signal. If it goes down to the 50 SMA, touches it and bounces, that's a long signal. And that's a very valuable technique. So thanks for the trade. See, that was a good one I hadn't planned on covering, because I hadn't planned on covering it, but that was a smart question from a trader that kind of brainstorming style encouraged me to give you a good, intelligent, correct working answer. So that's what to do on things like this. If it has a history of bouncing off the 50 SMA, then play that as a reversal or a pivot setup to go high, go long above the high of the candle once it bounces off that moving average line. So yeah, good question. Any others?
All good right now. One more just came in. Ken, do you use VWAPs anchored in constant?
I know the VWAP is absolutely, I won't say useless, but it's like a level 2 or level 3 box. Professional traders don't need it. the VWAP is helpful as a evaluated average price, is useful as a benchmark to see what the price to which the professional trading community is aware of in terms of a key area. But I don't use squiggly lines to make trading decisions for the most part. I use price action and ranges. So I don't need a VWAP line. I don't need a MACD. I don't need a stochastic. All I need is a great chart like this guy and the wherewithal to scale in and position size. So, and the VWAP would be a line that you would use not on this chart, but on a day trader's chart. The evaluated average price is helpful as a background reference, but it's not very critical at all. It's not important. What's much more important is things like the VIX, the trend, the sector rotation, if money flow, and also which of the four markets. For example, they're shorting the Russell today, right? The sell-off on the Russell. That's the kind of intel you need as an active trader, right? So for example, if we're looking at our day traders chart, and you're doing a quick comparative analysis of the inverse instruments, the Russell leveraged inverse is much stronger than the NASDAQ leveraged inverse. That's a just okay chart, or the Dow. They all made this is like a really weak chart. The S Dow, the short Dow. So the Dow components are stronger today than the Russell because the inverse Russell is much stronger. And I'm trading this. I'm in this one myself, and this is probably a really good chart to trade. When it comes to reversals and pivots, if I got a story for you, take a look at this. That's not too exciting till you step back a bit and look at the volatility. So the 1 year on this guy's currently at 31. It could easily double up to 60, right? This is if they sell small caps, this guy goes up. That's one of my favorites, TZA. Another one is UVXY. That is my absolute favorite, trading the SIBO Volatility Index futures contract. You don't want to hold this longer than a week or so because there's contango or price decay that erodes the underlying value. It's more for intraday trading or short-term swings. I often short-term swing this for 3 to 5 days. And I do so during the peaks, of course. I try to stay clear, stay cash when it's grinding its way down. And then when it starts to light up, it can produce a really good move. For example, TVIX, I bought at 54 and I sold 940. That's my best trade of my life at 800 points or whatever. So anyway, good stuff. Anyway, so pivots, this still looks like a catch a falling knife. And what do you notice? When it breaks the 50 SMA, it does hold for some length of time if it's strong, but this last time it didn't. So the 100 is again a strong signal for a pivot in this chart. This is my favorite chart for a potential big pivot. When the market sells off, this is the first thing to go up. And even if you don't trade UVXY, I highly recommend that everybody who's a day trader at least follow it because it's got really good volatility. I called a long pre-market for my traders today in the low 27s, and I said to sell the 28. And again, this is the whole number strategy, the pivot strategy using whole numbers. When you're down in the muck and you buy the dip, sell the rip. So we got previous day's low, the PDL over here. You got a current day bullish cup pattern. And the main thing that I wanted to draw your attention to, ladies and gentlemen, is the whole number support. Now, if it like here, you stay clear of it down under the whole number, but once it pokes its head up, it's fair game. You trade within the whole number. So 27, use the previous low as the stop value. So long over the 27 was indicated, and that's how I traded it today. And I'm letting it ride because I think it's got more left in it. But the day trader's round trip for the pivot would be within the whole number. You buy the 27.20 and then sell it once it gets up to just under 28. It's say 27.90. And that'd be good, 70, 80 cent round trip for inside a whole number range for an intraday trade. And that's a really good setup. And I like this chart a lot because it's got a lot of upside. So good questions. Now, sometimes, but not always, a reversal play to put in your playbook is a end of day short squeeze. Now, I did not see any in these charts today because the broad market is weak. If the market were strong, however, and you see this is another kind of a final playbook is if you see a chart that has a big multi-point range like this or this, I like that one better. It ran from 9 down to 340. There's lots of upside in this if it bounces, right? It's a strategy called buying into previous strength. If somebody bid it up to $9 a share, now it's at $3 a share, at least they are likely to, their thesis is that it's a net long position. And even if it dropped, it's good for often a squeeze play into the end of day. Now, because the market was down today, that was not the case. But on days where the market is sideways or up, often you'll see a short squeeze during the last half hour. So everybody shorted this guy on the way down, especially here. They look to cover their shorts during the last 3:30 to 4 p.m. And often that'll produce a nice big spike that you can trade for a reversal play. That's an advanced one. If I was doing a like $10,000 a year mastermind coaching program, that's the type of play that I would say for it. But I'm giving it to you guys here pro bono. So anyway, it's a end of day squeeze. The trick is they've got to be multi-point, big percentage drops, and you still don't buy it unless it breaks over whole numbers. So for example, this guy was going to buy over 5, but it never hit. This guy started to bounce off the 3 whole number, but it didn't go too far, but it did start to bounce. So it's a good candidate for tomorrow. These are all good candidates for tomorrow plays. This guy's a little choppier. I don't like it as much, but it had a big range, so it's worthy of consideration. MRIN, another good example, ran from 13 to 18 today and pulled back. So these are all good candidates for bounce plays, every single one of these. Now, if tomorrow's a big sell-off day on Wall Street and the market's dropped, then obviously we leave these alone. But if the market recovers, these will likely be among some of the first that will at least regain some of their lost ground today. And not to mention the stellar breakout charts like XELA and AHPI did really big runs today. So those are some other types of charts and types of patterns to look at. Now, do you notice kind of a parting thought? If it's going up and you're wondering, and then it starts to go down, you're wondering, where do I go long? Well, look for a pivot off the mid-range whole number. And there's whole number support. And I don't know if there's a supportive candlestick, a hammer, or bullish engulfing, but yeah, kind of a bullish engulfing right there. So we have a bullish engulfing here, and that led to a breakout to the upside until we ran into when you wish upon a star, shooting stars, sell the low right there. And learn candles from Steve Nissen because he taught me all this stuff. Anyway, bullish engulfing, that would have worked great. The bear shooting star, that would have been great. The trade setup would have been 8 to almost 10, which is a huge run on over a 10% run on this thing in just less than an hour. And the neat thing about this strategy is you do not need to do split second timing. You don't need to scalp in and out thousands of shares. That's a surefire way to blow up your trading account, is to listen to these morons making YouTube videos claiming to make $100,000. Fortunately, they're getting busted by the FTC. Muhaha. CDI is in their future. Anyway, or CID, whatever it is. But the point is, don't listen to people out there trying to tell you guys to trade thousands of shares of low float under $10 stocks. That's a bunch of hooey and a hogwash. If you do trade cheap charts, for your trading account's sake, potentially trade charts like this with epic volume and really good volatility, because there's a lot of money to be made exclusively in these charts with big ranges and using things like whole number pivots. Let's say you missed the first breakout. Welcome to my world. And then sells down. You wonder, where's it going to bounce? Well, look for a bounce over a whole number that's near a midpoint like this $7 is. So that's going to wrap me up for today. Let me know if any questions, folks. I'm the real deal. I'm not one of these bogus BS PowerPoint jockeys, even though I'm looking at PowerPoints now, because it's easier to read than to hear me say trademastery.com. But you folks are all welcome to get my free webinars. Get to know me for free, right? And no big sales pitch or anything. I just say, join my room if you want more. But we cover, and these are just half an hour every single Saturday from noon till 12:30 East Coast time, exclusively at trademastery.com. All right, Jordan, any questions? And I'll be happy to answer them, and we're going to wrap up. But thanks everyone for being here. Appreciate it.
It looks like we've got no questions at this time, Ken. Everyone seemed to really enjoy the presentation. And as always,
it's late in the day and they're tired.
Yeah, I think everyone's a bit tired and a lot of information to consume. So we want to thank you for joining us as always and being a wonderful speaker in the Money Show roster. And it's been an absolute pleasure.
Hey, you too. And thanks so much for the help. I've been speaking for Money Show for 20 years and enthusiastically recommend it as the place to be. Unlike others, Money Show is the best and the brightest. And I am really honored to be a continued Money Show speaker after 2 decades, and looking forward to hopefully 2 decades more. So thanks, Jordan, and thanks to all of you for joining us. Be sure to stay tuned for additional Money Show events in the virtual expo tomorrow and the next day. And certainly worthwhile because you get exposed to so many great ideas. You can kind of pick and choose and develop your own personal trading plan based on what appeals to you personally on your terms that makes sense for you. So thanks, everybody. Visit Trade Mastery, and I'll see you later. Thanks, Jordan, and thanks, Team Money Show.